Today, we're going to give you 5 topics and 5 great ideas to help you be better financially wise in 2011 and help you reach your financial goals that you set out for yourself. Step 1 is to review your credit report. Oftentimes, what we can do is go to annualcreditreport.com and order a free credit report from all 3 bureaus of our credit report. And the thing we want to look at is see if there's any fraudulent charges on there, if anything that we did not do is on our credit report, and if so, if there are things like that on it, it can hinder us from getting credit. And the important reason for credit is one thing: it helps us get cars, homes, or any reason that we might need to borrow money for the future. Our credit report is going to dictate how much we paid to borrow that money. Step 2 is to check your beneficiaries on your banking account, savings account, life insurance, retirement planning, investments. How many times have you ever heard about somebody who might have passed away but put the incorrect beneficiary? Or they put the beneficiary when they was young as a kid, but they got married and had kids, and now the money goes to their ex-wife or their mother who passed away and to his brother or brother-in-law who he doesn't even like. One great thing is to check all our beneficiaries and all our insurance and financial accounts to make sure that everything is ordered. So if something does happen to us, that we can make sure our family is taken care of and our state's taken care of in the proper way that we want it to be. Step 3, let's maximize our Roth IRA. The government already said that they're going to raise taxes in 2 years since they extended the Bush tax cuts. With that, let's start hedging our bets now. With the Roth IRA, the great thing about it is, yeah, we are paying taxes on that money today, but the money that we put in it, it grows tax deferred, and we pull it out for retirement all tax free. Now, the great thing is that you can contribute $5,000 a year into it. And if you're over 50, you can contribute an additional $1,000 to make it $6,000 a year. And remember, that money's all tax-free. Now, you say, Jason, I make too much income. I can't qualify for a Roth IRA. If you can't qualify for a Roth IRA, there's a couple other options you can do, such as converting your regular IRA to your Roth IRA, or to get a cash value life insurance product. With all those different ways and vehicles, it can help you have some tax-free retirement income when taxes will go up in the future. Step 4 is to review our portfolio. And oftentimes we put money in insurance and retirement vehicles and investment vehicles, and we don't look over it on a yearly or quarterly basis. And sometimes as the years go by, our portfolio might have got way too aggressive or way too conservative to compare to what our goal is. A good thing to do is start looking over our portfolio and figuring out, is our portfolio helping us get to our goals that we're reaching? Is our portfolio too aggressive? And if the market goes down, what would happen if there's a big tumble in the market like October 2008? Or what happens if it's too conservative? Maybe if I need to put more money away, or I need to get a little bit more aggressive to reach the goals I anticipate for myself when I do retire, or when I ever do need those investment vehicles or savings vehicles or retirement vehicles. Last step, it's better to save than to spend, and to spend to save. And what I mean by that, it is better for us to schedule ourselves on a regular, consistent saving and investment and retirement plan schedule. One way we do that is we go to our bank accounts, our retirement plan, and just scheduling beforehand what percentage of our income we want to go every time we get paid into our vehicles that we need, compared to if we just spend and save at the end. Now, with the scheduling things, it will help us build up our portfolio, build up our emergency funds, and help us reach all our financial goals that we set out for ourselves, because we plan ahead of time what we need to do. And with that, we can do it without us consciously thinking about what we can do for those things. What I showed you today was 5 great ideas and topics and ideas to help you reach your financial goals for 2011. Now, remember, if you have any other questions or anything, you can check us out on MFIS on YouTube, MFISFinancialInsuranceSolutions.com, or you can find us on Facebook, Twitter, or any other social network out there. And hopefully we'll see you next week. Have a good evening.